lost 5 grand in 3 weeks. At that time, that was all the cash I had. The guy next to me, more letters after his name than you'd ever seen, but he was struggling to make a success of trading. And that's where I think it hit me that, yes, I've got to learn technicals, but actually what's going to get me through is mindset. My goal in my head was, if I can just pay my rent through trading, then I'm quote unquote free. Setting arbitrary monthly or weekly targets as a trader can actually be really detrimental. If you're an entrepreneur and you're running your own business, you're a control freak, and you're not going to be able to pick up the phone and solve the problem.
Okay, so welcome back to the Trading Battle. I'm your host, Steve Ruffley, and today we're joined by a trader who spent 20 years showing what real professional trading looks like. Ali Crooks isn't just a market veteran, he's one of the few FCA-regulated authorized money managers with a verified fund that's been profitable since 2020. He's coached traders around the world, logged over 10,000 hours of live coaching, and has been running successful trading programs since 2004. So, Ali, welcome to the show. How are you doing?
Hi, Steve. Thanks for having me on.
I'm going to start with the question I ask every single trader. Tell us your story. How did you get involved in trading?
How did I get involved? Gosh, it's so long ago, it's becoming a more and more faint memory. But for me, it was, I wasn't interested in trading going back sort of 25 odd years. I was interested in making money. So for me, it was more about, I was more of a serial entrepreneur. So I had a very, very successful first business, and I'd sold that. I got into a second business. And at the time I got into that second business, I started getting involved in an investment club. So this investment club used to meet at the Microsoft offices in Reading. And we'd meet once a month, and we'd sit there for 3 hours discussing which stock we were going to buy with our 50 quid that we put in, each of us, that was accumulating over time. And after pulling my hair out most of the time, because at that age I was impatient and just wanted to get going. But there was a guy there who I met who traded. So he was a lorry driver. He was actually from Australia. He'd moved to the UK. He was a lorry driver, but he spent his time trading in his his spare time. And I picked up a few things from him. I dabbled in it. So I got involved. Back then it was options. So it wasn't spread betting, anything like that. I was trading covered calls and call options and working out strike prices and all that sort of thing. And I didn't really know what I was doing. I lost 5 grand in 3 weeks, and it doesn't sound like a lot of money. I mean, it's a lot of money to some people, but at that time, that was all the cash I had. So I wiped out literally in 3 weeks because I was getting the options criteria right, but I wasn't getting direction right. I wasn't understanding simple price action. I was buying on what I thought the stock might do rather than any kind of technical guidance. And to cut a long story short, the second business I was in was floundering. And I can remember very vividly, I was stood outside Bermondsey Tube Station, and we'd had this potential deal going on with David Lloyd. And the ops director, Rip Baird, rung me up. And it feels quite visceral, I can remember it. And this was a regional deal to get our kit into their David Lloyd gyms. It's one region, and the plan was to go across the whole of the UK. It was £2.5 million, which back then was a decent chunk of change. And he said, "Sorry, Ali, the deal's off." And what had happened is Techno Gym had basically swooped in and offered them a deal that two guys with some new tech couldn't compete with. And I remember at that point, my business partner was like, "Right, I'm out. I'm not doing this." He'd remortgaged. I was in debt. And I remember at that time I went, I want something that I'm not beholden to anyone, because I felt really resentful to my business partner at the time. But the reality of the situation, he was probably right. There was no way we were going to be able to compete with the big boys. We didn't have a lot of funding behind us. And if we hadn't got that one deal, it wasn't really going anywhere. But at the time I was like, he's pulling away. I want to keep going. And that was the sort of indirect way that I got involved in trading, because what that made me realize is that if I'm trading, whether I win or lose, whether wherever I am at the end of the week, end of the month, whatever the scoreboard says, it's down to me. And that's what drew me in. It wasn't a love of chance. It wasn't a fascination of candles. It wasn't, patterns or processes. But as I say to the guys I work with, if you don't start finding it fascinating, or, even more extent, start falling in love with trading, it's not gonna last. So very quickly I became quite obsessed. And at the time I was working a dead end job in Princess Risborough near High Wycombe. I was living in a 1-bedroom flat. And what I was doing is I was going out and I was basically filling boxes, packing bags in this factory, going through carousels, picking out bits and parts for cigarette machines. This is how long ago it was. And then I'd get home at like 1 o'clock, and all I would do is trade. I'd just get back for the US Open, and I was just trading just trading the US Open. Again, not really knowing what I was doing. And then I realized that I was in a situation where I had to get some sort of learning. I had to get some sort of framework. So back then, there wasn't what there is now on YouTube and all these other things. So I flew to Vegas for a course. I can remember being on that course, and they did the usual thing where they dragged up people to the stage that were their best traders. And this guy they dragged up, he looked, without being disrespectful, he didn't look like the sharpest tool in the shed. And the guy next to me was a doctor from the UK, and his leg was going under the desk. And he was looking and thinking, how is it this guy's successful or supposedly successful, yet I can't do it? And I'm sort of there naively just learning and trying to pick it up. And it was a real insight that the guy next to me, had more letters after his name than you'd ever seen, but he was struggling to make a success of trading. And that's where I think it hit me that, yes, I've got to learn technicals and I've got to learn all these systems, but actually what's going to get me through is mindset. And that's really where the first sort of mindset shift came in. And for me, it was all about setting myself the target of paying my rent. Back then, my rent was about £550. I didn't need a huge amount. My mum and dad were around the corner, so I'd go around and get food from them. And my goal in my head was, if I can just pay my rent through trading, then I'm quote unquote free, which is ridiculous because you could easily not make it the next month. But what I found happening was very much what you see with these kids doing prop firm stuff, is that because I'd set this goal, as I got ever closer to it with my result, that would affect how I would trade. And there would be month after month where I'd get to 400 quid or I'd get to 450 quid, and then it would drift away. So that was my first sort of opening to this idea of, setting arbitrary monthly or weekly targets as a trader can actually be really detrimental. And when I took my foot off the gas and then started to trade the setup, and if it meant the 5th of the month was when I'm going to hit the target, or the 10th of the month the following month, I started to realize this arbitrary marker in the sand is not the key thing. So yeah, that's a short, sort of windy version of where I got to. And I traded for probably about 18 months, nearly 2 years, just in that situation where all I was doing was doing part-time work and trading on the side and just building up capital because I had debt to pay and there were things that I was trying to sort out. So I did that for about 2 years and then went full-time for probably another year and a half. Maybe a little bit longer. The dates are a little bit vague, but yeah, it was about a sort of 3.5, 4 year period where I was hustling part-time and trading, and then did a bit of full-time trading before the opportunity to teach came along. So yeah, that's really the start of the journey.
Yeah, interesting. I mean, yeah, it's always interesting to hear people's initial exposure. It's never what you think either, is it?
No, it's some of the stories that I hear from people that that come to me. It's so fascinating to see how they get involved. But yeah, I think the critical thing is that whatever your initial reason, and some people's reason is just a fascination, but ultimately we all came in for the reason we want to make money. And that's, but you've got to fall in love with the process. You can't just be obsessed with the dollar amount at the end of the week. Otherwise it's pretty short lived.
Yeah, I think you're exactly right. Cause I kind of, my experience of dealing with traders is you get the people that need to make money. They have the most pressure on them. And then the guys that just need something to do, but they never get the results because they don't need the money. So you need to kind of find that balance in the middle.
That's really insightful. I think, yeah, I call it the sweet spot. Yeah. So I remember working, one of the first guys I worked with that went full time, a guy called Eddie. When he first came to me, he would trade really well for about 3 months and then he'd blow up. He'd just do stupid stuff. And I was speaking to him at one of the live events I do. And I said, what do you do for a living, Lenny? And he said, oh yeah, I fit air conditioning units. He said, yeah, it's pretty good. It's well paid. And I said, if you don't mind me asking, what sort of ballpark? And he said, 85, 90 grand. And I was like, how much is in your trading account? He said 1,000. I said, you need to up the amount because it's too little. I wouldn't give that as blanket advice to everyone, but the reason you're not following your rules is when you lose, it doesn't hurt. So you just think, oh, well. So yeah, and that's actually what got him consistent when he had a bit more skin in the game. So it can be very different reasons why people get involved or what gets them to a point where they start doing better.
Yeah, you're so right. It's got to count. And I think a lot of people trade with money they can afford to lose rather than trading with money they don't want to lose. And that's where the scalability comes in. And when people just, because I've had people that have stuck 100,000, kind of US in an account because they have more money than God. And invariably they'll lose it all because they're not interested about making money. They want the thrill of making even more money because they've been successful. They think that obviously they could be then successful in the market. So yeah, and it's different for everybody, isn't it? It's different for every scenario, every person. So yeah, you do have to kind of work with people, and that little bit of insight, a little bit of the tweaking, like you say, they can find their sweet spot, and that's where the kind of magic happens.
I think, yeah, as you said, it's not the same. It's not the same for everyone, and those extremes are the ones that, when you're coaching them, you feel like you're bashing your head against a brick wall, because they will. They'll just lose. They'll lose 100,000 and go again. Lose 100,000, go again. And then you've got the guy at the other end that's too frightened to push the button because it's the only thousand he's got, and he wants to turn it into 50,000 in in a year. But he's got unrealistic expectations, but also because he's holding on to that money. He only needs two losers, and then that third trade, he's hesitating, or he's not quite sure, and it manifests itself in overthinking. He's suddenly bringing in elements to his chart that he wasn't using before, or he's now listening to some squawk box or news that wasn't part of his process, and it's all because he's holding on too tight because the money's too important to him. So you're right, it's finding the right balance.
Exactly, exactly. And what you find yourself is you keep saying the same thing because you know what they need, and then you find more inventive ways of saying the same thing, and then eventually they get it. Yeah,
That's where I think some people struggle, is because the narrative that they're telling themselves the same narrative, and it might be the narrative they want to hear, not necessarily having that feedback loop. Like you saying that is so interesting, because I'm the same. If I sometimes all you've got to do is just switch the framework in someone's head, or say the same thing but saying a different way. But the problem, if the traders out there on their own, is they're running the same loop, they're running the same pattern, and often it's very unconscious. And as a result of that, the performance doesn't change. And when they come up against the same brick wall, the same excuse, the same voice in their head shows up, and they're not able to flip the switch. And they know logically after the event, they go, "No, I did it again," but they don't know what the trigger is, because they're not getting a reframe in terms of how they're thinking.
yeah, absolutely right. I mean, I know you've done 10,000 hours plus in kind of trading and coaching, so you do get to the same patterns, and that's part of trading, isn't it? If you do it long enough, everything's a pattern. And,
Absolutely.
it's how you put the dots together. And I think the hardest thing is, especially for, like intelligent people, they think they can outthink the market, or,
Mm,
with a bit of, automation or this, they just have to think the way they think, and then the markets will come to them. And it's not, the markets will always be to some extent random, and you have to fit in your thinking that way. Yeah, it's really interesting. It's really interesting. So, also, what it says is you've done some teaching revolved around the platform of Rich Dad Education. So that's the Rich Dad Poor Dad, I guess.
yeah, that's kind of how I got involved. So when I funny enough, at school I wanted to be a PE teacher. So I've always liked teaching, and I used to stick back and help and coach and get involved. But with all due respect to my PE teacher, I saw the car he was driving and went, yeah, but I want a bit more money. So I had this conflict where I was like, I want to do that. That was what I wanted to do, the job, but I wanted to make money. And so I never set out to teach with trading, but it came around, and it all started in London. I remember I got a phone call from a friend who was involved with a marketing company. He said, "Oh, I know you trade. I found out about this company, and they're looking for people to come down and teach at weekends." And I was like, "Well, this is great," because the truth is, I was getting, I wouldn't say bored, but my life was ticking along, and trading shouldn't be exciting. It should be fairly regimented, and then there are days, there are weeks, you're ticking along. And I also knew my personality style. So I'm like a driver expressive. So I'm left quadrant, type A to an extent, but I also like variety. So sitting there, yes, you can get variety, and every day is different with trading, but there was an element of, well, this looks good. I can go and once a month go down and teach on a Friday, Saturday, and Sunday, something that I'm doing. And yeah, that's how I got involved. I remember it was like X Factor. I went down to this audition in London, and I'm queuing outside this place, and people are asking me, and we're talking in the queue. And I would say 90% of the people there to audition to teach trading weren't trading. It was, and I literally had to go in, stand on an X, and talk to these, and just talk to myself. And I just said a few things, and then I got called back, and I got involved. So that's how I got involved in teaching. It wasn't part of the plan, but I was very grateful for it, because it got me to travel, it got me going around and meeting people, and also back then. Now most of what I do is small group coaching or one-to-one coaching because I'm at home, I'm trading, and that's where I want to be. But back then, really interesting being in rooms because you see the psychology. So linking back to what you were saying, you see people, the classic one is I'd have a room of 50, 60 people and there'd be 10 entrepreneurs and they'd come over and say, yeah, I think I'll have no issues with this because, I can deal with risk. And my brain's going, yeah, but I know that you're a control freak. If you're an entrepreneur and you're running your own business, you're a control freak. You're going to struggle with letting the market do its thing and the random nature of it. And you're not going to be able to pick up the phone and solve the problem or put somebody on over here and move this, like play chess with the board and make sure the business is or the issue or the problem sorted out. You're going to have to sit back and allow it to do its thing. And that was a real interesting one. And I've done coaching courses and I read about that sort of stuff. But for me, it was the boots on the ground in the trenches. And I say to people, with the amount of people I've coached, you'd have to be an idiot not to see some of the patterns that form, because you said everything's a pattern and people behave in very, very specific ways. And I don't like to put each person in a box and say, you are this or you are that, but you do see the patterns over time. You see the difference between an analytical type personality style and a driver personality style, the difference between internal and externally motivated people, how easily people get bored. There's all these things, how it impacts fear and greed. And I find that side of the journey just as fascinating, and helping that person just as stimulating as I do trading. I still have a huge passion and a huge joy for trading. I'm not in front of my screens day trading like I used to be back in my sort of late 20s, early 30s, but I still find the challenge of trading as stimulating as the challenge of coaching. But for me, being able to do both suits me down to the ground. I know there's a lot of people out there like, well, if you coach, then you're in that bracket of, if you can't, if those who teach can't do, or whatever the phrase is. But for me, I'm like, but there are a few of us out there. There's a group of us out there that actually do the thing and do it. And I think for students that are out there, one of the things I think that is a big issue, big kind of thing, is that they think, well, if I just follow Ali, if I just trade like Ali or trade like Steve or whoever it is, I'm going to be successful. But they're not factoring in the fact that they're not me. So there might be core elements of how I trade that person needs to take on board: risk, certain setups, being disciplined. We can, you can list them all out, but at some point they're going to have to make what they do their own, because they're their own unique makeup and their own unique personality.
No, it's very interesting the way you said that, because that's the same for me. Because I've traded for a long time, but I do things like this. I host podcasts. I've done things in the past, and people don't recognize or understand, when you do this for such a long time, you spend a tremendous amount of time on your own. Okay?
Yes.
So a lot of my days are spent just me and the dogs. I need
Yeah.
something. I can't. I don't sit on the floors anymore. I don't trade. Kind of all day. So you need some interaction with people, or you will literally go stir crazy.
Yeah.
So, things like this, and it's a bit of a buzz. I've always liked doing shows, and I've always liked kind of, I know you've written a book and I've written a couple of books, and it's just something else. It's involved in trading, but it's not actual trading. So you're still involved in the bigger picture, but your focus is just somewhere else for, smaller periods of time. And then you go back to, the day job and make the money, because I could do a podcast every day. It's not going to replace trading income. So I think, people have a misguided idea that there's all these influencers, and that's what I've seen over the years. There's a lot of guys, doing I'm going to step out of the private jet and all that nonsense. That's what's given the kind of more serious mentor / educator a bad name. And because there's a lot of people that, as you say, are just in it for, I don't know, the fame or the affiliation. They're not in it because they're actually, good.
I think that's a really good point. And what I'm noticing is that the amount of sound biting that's going on. So you've got these young kids who are saying things that have been their phrases, their keepsakes, that have been in the trading game for years. And I'm like, I heard that 20 years ago, and you're saying it like it's new knowledge. And I'm like, you've read it in the book, but what does that actually mean? How are you actually going to apply that to either your trading, or if you are coaching and mentoring someone, how does that apply? So a classic one I hear is, oh, if you had 3 losing trades, stop trading that day. And some kid who's like looks 16 is saying it like it's words of wisdom. And I'm like, hang on a minute, what if that strategy needs you to take every single setup? So you stop trading because you've had 3 losers by 11, and all the profit for that day or even that week is coming in that afternoon. Now, if you're a new trader and you haven't actually got a handle on risk and you haven't got a handle on discipline, then having a cutoff point might be good because you need to actually stop yourself before you end up blowing your account. But another trader doing that could be the worst thing that they do because they've they've literally scuppered what was a six trade day or a 6 trade opportunity. And that's the little subtleties that you're not hearing. You're hearing these sound bites on TikTok from these young kids, but they're not actually delivering any context because they've not been through it for long enough to understand that phrase isn't as blanket that all traders should do that. And the trouble is, somebody else has got themselves a strategy and they're trading it. They hear that, they cut themselves off, and they're hearing sound bites of information rather than creating an element of context.
Yeah, totally right, totally right. And when you go back to like, the floor days of like the early screens, don't be a prick for a tick
Yeah.
and things like that, then there's the kind of things that stick with you, but it has no context in the modern world because they don't really understand what that world was all about and why people are saying it. That's interesting. So when you run the trader support club, what's the kind of journey that the traders go through? Is it mainly technical, fundamental, a bit of everything?
For me, it depends where that person's coming in and their level of experience. So if there's somebody fairly new, then usually what's happened is they're either overwhelmed with information because they're doing the social media rounds, or they're completely new and they're like, they're a blank canvas. So in that scenario, a lot of what I'm doing is saying, right, you need to sit down and you either need to be able to extrapolate a certain element of technicals from what you've learned, or if you can't do that, then just learn my system. Not because my system's the best, but it's proven, it's got data behind it, and it's set up in a way that it kind of backs you into a corner because we're combining technicals, risk, the same thing that all traders would do. There's a different variance between how much, depending on what type of strategies you're trading, whether you're day or whether you swing. But my big thing is I want to get these traders thinking in a data orientated way. So if whatever they trade, they need to, I say if a trader comes to me and they've got a strategy, then it's got to go through like the TSC mill. It's got to be able to, the trader's got to be able to put it through our data process. So he can say that this strategy, when it's stripped back to its bare minimum, whatever that bare minimum looks like, he's able to say that there's 100 trades in a quarter, and this is the win-loss ratio. This is the average risk to reward. I have a fixed risk to reward, or I have a variable based on higher time frame moving average, whatever it is. But they're able to quantify it and almost say, look, there's my strategy, and it's not just what are the ABCs of it, but actually what does it deliver on? What's its capacity? And then what's the trade frequency? When are those trades coming? And the challenge I think a lot of people have is they go and buy a strategy or learn a strategy, but they don't know if it's the right strategy for them based on their personality. Or on top of that, they haven't thought whether that strategy fits into their lifestyle.
Their personality, lifestyle, yeah.
You got some type A gun ho young kid, and he's working shifts and he wants to day trade. And I'm like, well, it's like what you said earlier. What are you going to do? You're going to bring a couple of the yen pairs to fruition at night, and then the next week you're trading majors, and you're all over the place. But you want to day trade because you've heard that's the way to do it. So what we do is try and fit the initial strategy and a process around what that person wants to achieve. And I'll get real with people. If they're saying, I want to turn 20 grand into 100 grand, I want to do it in a year. I'm exaggerating. You get the point. I'm like, well, actually,
no, I've had that.
Yeah. The numbers, the time that you have available, your level of experience, and the strategies you have access to via me will probably deliver something around this amount. Okay. Well, if you're still in the game and you still want to learn, great. If not, I'm not the educator for you, because I'm in a position like yourself where trading is the mainstay. So if that person isn't willing to do what's required, I don't want to work with them because I don't need to. So whereas, guy on TikTok, whoever it is, it's all about just getting people through their training. So yeah, we do that. A lot of the people I work with one-on-one, a lot of those guys, they've already got a system. So it's not so much learning from the ground up what I teach, but it's I'll dissect what they do and go, right, you've got no focus on data and journaling, or your risk is all over the place, or you struggle with, so a guy I'm working with at the moment, his technical skill for somebody who's been in the game, he's only been in the game about probably about a year and a half on and off. He's a farmer. His technical knowledge is insane, but he's got this mindset where he's trying to predict the market. And I think he's been brought up on a lot of ICT stuff. And again, I'm not knocking it, but I think there's a kind of subconscious driver that is, we found the matrix, or we can see behind the curtain. And although he doesn't believe that, I think there's an element of him where you can hear in his language, he's like, well, this and this happens, so this is bound to do this. And then when it doesn't happen, his mindset's wrecked. So he's a classic example of somebody that I had to actually say, right, you've got too many criteria using all of these different things. Let's strip it back. We stripped it back, but then the psychology work came after that, because the psychology issue was, well, I think this is going to happen. Then it doesn't. Devastation. And he had a highly profitable strategy on paper, but what he hadn't done is run it through our mill to find out what the win-loss ratio was. It was actually quite low. It was only about 30% win-loss ratio. So not only is he fighting this thing of knowing what's going to happen when it all lines up, the irony is when he put it through the mill, it was only right about 30% of the time. Well, when it's right, his average R value is 9+. So his wins are big. But what he's had to get used to is just being able to say, just because it all lines up on a chart doesn't mean it's going to go a certain way. And actually, it's going to go the opposite way. He's going to lose most of the time. And then very subtly, I got him to look at how many times he was stopped out of trades, but they went the way he wanted, because that was the thing that was psychologically messing him up. And then he's thinking, right, I need to change my stop size. I'm like, you don't need to change your stop size. You just need to deal with the fact that your strategy only wins 30% of the time. And actually, further down the road, he's got past that. But when I was coaching him, I was like, we might have to find or tweak this, because you simply can't operate with that lower win-loss ratio. You've not built up enough resilience. There are traders that, if you look at the stats, a lot of the traders that have been in the game 30, 40 years, they're the ones that are running very low win rates, because they've had the exposure. They understand it. His knowledge was good, but he's only really had about 9 months of that year with actual trading experience. So he's fairly new, and he's still got to build up that resilience. So there's all these things going on that I'm working with when I'm coaching people.
Yeah, absolutely. Yeah, no, that really does resonate, because it's almost like the classic quant thing that people are much more interested about being right. It's like, well, that's
Yes.
great, but you're coming to me to make money, so I will take what this is and help you make money from it, because that's more important than being right.
Yes.
Now I see your logic.
Yeah.
And it's saying things as simply as that that can help you.
Yeah.
So yeah, that's really interesting. So when you've moved through the kind of education and you've traded your own capital and you've moved into the more regulated arena and trading, managed capital, how's that differed? That must have been a mindset shift for you in some way as well.
It was. I mean, I went into it. I did my research, and I looked at it and said, look, if I'm going to do this, I'm going to play a 10-year game, and it's only really in the second half of that I'm going to look for bigger money, because I want to build up a track record. If big money comes or something happens, great. But really, this is about building resilience in this area. And even though I did all the prep and I looked at it and said, big money's all about drawdown. They'd rather make 20% or 15%, but have a smaller drawdown than you offer them 100%, and they have to lose half their shirt to get there. So I knew that. But what was interesting, I would say the biggest psychological shift was I didn't realize it at the time, but because I'm reporting in my numbers every month, it made me start thinking a little bit short term. And it didn't impact how I traded. It didn't impact my discipline. But I remember just saying, I started feeling that subtle thing of wanting to hit a mark by the end of the month. So that was probably the thing that I didn't realize would actually hit me a little bit. I was like, oh, just a little bit edgy. Or that month I was -2. And then it swung back by the middle of the next month. But because you're reporting in month on month, I'm starting to think like some of my traders do about wanting to get to the month and feel like they've got something for it. They're positive for the month.
Job.
Exactly. Done a good job. So yeah, but that soon got over that. So yeah, I think that was probably the thing that I didn't realize. But for me, it was all about just doing a very similar thing to what I do now, but just lowering risk, which has worked really well. And there was a period, ironically, where I lowered risk and I reduced trade frequency, because I don't want to be trading at quite the same frequency that I do on my own account. But what was interesting was I dropped, and there'd been 3 strategies that I've been trading on my account. I'm only trading 2 of those on the fund. And then there was a 6-month period where the one strategy that I wasn't trading on the fund was the best performer. So there's me managing risk. There's me lowering trade frequency, but actually it hindered me for that 6 months because I didn't have the strategy that performed. So that's just an example of, you can play all the, be as strategic as you like. It's just going to be what it's going to be. So you can play all the cautious risk, but sometimes it's the reward that actually offsets the risk. So yeah, that's it. I've enjoyed it, and I think going into next year, I'm going to be pushing that a little bit more.
So did you have any kind of issues scaling up? 'Cause that's one thing I find. You mentioned before about people that get this idea they want to be day traders and then they can't do it, so they're swing traders. Scaling up is one of the hardest things I think any trader can do. So when you move into the kind of fund situation, generally you're trading more size. Is that
Yes.
just sticking to the plan, or do you
Yeah, I
actually
think
have to make a mental?
Yeah, I think for me, the key thing is not it was not knowing, accepting the fact the size thing wasn't so much the issue. It's accepting the fact that people will be coming in at different times, and if you know that somebody's only come in and then you hit a bad 3 months, there's these thoughts that don't necessarily affect how you execute, but they're just sitting in your mind that wouldn't be there on your own account because wherever I am, it's I could argue that I've got equity highs based on where I was 20 years ago. So even if I hit a really bad period, it's still profit that I'm losing. It's not like a new guy that comes in, they put their 5,000 in their account and they hit a drawdown and they're losing capital. But when you know that there's people coming in the fund, and you have to accept that some people will nod their head and say, yeah, I'm in it for the long haul. And if they haven't had a return in 6 months, they take their money and go. You just have to accept it. So yeah, that was something that was on my mind. Scaling up, for me, I think that the key thing was I wasn't obsessing about. I don't obsess about what's the total net assets under management. I don't get too obsessed with that because maybe it's because I don't really want to think about it too much. But it's something that I'm sure as it scales over the next few years, that might be something that plays on my mind a little bit. But in terms of me every day, I'm only seeing my account relative to the other accounts. I'm not seeing the pot, for want of a better expression. So I think that's helped. Yeah, I see a big thing with the whole scaling up with, I took it very steady as a trader. My outgoings were very low then. It was just me, like I said, in a 1-bedroom flat. I wasn't, I could get a fairly good hit off a fairly low return, and I could scale a little bit and build up slowly on my own trading account. Whereas I think what I see is people scaling up too quick. So, they have a good run at 10 grand and then they go and whack 100 grand or 50 grand. And they think, well, it's only 10, the difference between 10 and 50 is not a lot. I'm like, yes, that's 5x more. So every trade that loses. And an interesting one, I was working with a guy about 6 months ago, and he went from about that. He went from about a 10, I think it was a little bit more, to about a 70. And he was imagining, he said, I couldn't help but not imagine the same trades that I'd taken last year suddenly giving me these bigger hits. And he's like, wow, that 2-to-1 trade would be X thousands more. But what he didn't realize was the trades that ran on, he never used to care about. So the trade that he got out for 2-to-1 that ran on for 4 or 5, psychology didn't bother him. But when the money was bigger, he started seeing the whole, look what you could have won mindset. Look how much more you could have got. And then he started breaking his rules a little bit, trying to run some of his trades for longer when actually that shouldn't have been part of the plan. So yeah, that was a really good example of someone who, when they scaled up, there was something that came, they didn't even think was going to be the issue. And it was the greed of what they weren't capturing, which didn't bother them when the account was smaller. So yeah, I see it with lots of different people in different scenarios. And that's why I think a lot of the time you have to experiment. You don't always know what the issue will be. You can't read 10 mindset books and knowing, well, this is me and I realize I'm this personality style and this is what's going to happen when I trade, because it can be strategy specific, timing specific, and you only really know once you're in it. So I would say mindset's a bit of an on the job. Some people deal better with scaling. I've been okay with it, but others struggle with it.
So from that kind of perspective, then, I mean, obviously you have, like you say, your mill that gives people the data. I mean, do you ever talk about, people that have the ability to trade and then just let them automate it? or like we hear a lot of talk about AI. We had a few guests on that saying that's the future. I mean, taking the emotion out, if you can have the capital and get it, what's your kind of view on maybe the future of trading from that perspective?
I think it will be a pocket that will work. But I always say, even an AI system, if you can run your system and let the system run, then you lessen the risk of you diving in on a trade by trade basis. But ultimately, the thing that AI will be able to do, and automated systems can already do this, is the automated system can handle the drawdown period. But what if you happen to check in, you as the trader, you check in and you see that timing wise, you happen to have gone into this thing, you're 12% down, you can still press the off button. So actually, you still need a risk tolerance. Yes, you might not be in front of the screens and it's automated and it can place 5,000 trades in a week and it's clicking through, and that's all great. But at some point, it still will be wrong due to the random nature of what's going on. So you still have to be able to deal with whatever that consequence is, because you can still go in and say yes or no. So that you lose the element of, well, is that my fault? Is that me? Do I need to work on something? Or I keep breaking my rules because it's being automated. But you still got to have, I think, an ownership of that system. You still got to understand it. And one of the things I'm working on is a semi-automated backtesting system, because I'm very big on especially my day trading students, backtesting. Not so much the swing traders, because their trade frequency is lower and they can look back at the data. But definitely for the day traders. But one of the things that I think is really important is, if a trader can speed that process up, but they still see what it is they're trading and what that system is and how it works, and the good weeks and the really good weeks, and then the frustrating fortnight or whatever it is. If they can at least process that, then when that inevitably happens in the future, they're better equipped to be able to stick at it. So I still think, whilst it's going to make things very efficient, very effective, but I still think at the end of the day, the human's got to have some ownership in what's going on. Otherwise, they'll turn it off when they don't like the result they get. And then I think you'll just see people strategy hop, but they'll just strategy hop with AI. They'll just do more strategy hopping because they can, or there'll be people that will take the ownership even though they maybe aren't participating quite as much.
So, I mean, I guess there's a lot of things happening in the world, especially in America. What's your kind of view, and how do you help people deal with the kind of more technical side? Sorry, the more fundamental side of the kind of unknown. So we've got the BLS not releasing data. We've got Trump and his taco. There's new market conditions, even for guys like us that have done it for a long time. This is Bitcoin. It just drops down below 86 and then rallies above 91. They're not unprecedented markets, but they're certainly shifting and changing in the dynamics. I mean, how do you prepare people for that side of trading?
That's a very, very good question. We talk about it quite a bit because, for a lot of our guys, they've got a data orientated approach. So if they're day trading, they are going to they're going to primarily be focused on the performance of that strategy, the ups, the downs. They've got the data in front of them. But the problem is that data is accumulated over 5 years. But the conditions we're in now, as you said, are very different. So I say you have to expect the unexpected. You can't always plan for it. So I think that for some traders, they'll have the level of they'll have a foresight and intelligence where they can merge some of these scenarios that are going on and see it in a certain way. But for the majority of guys, they're not. But the problem is they're trying to use it and trying to predict it. And what I see is two extremes. People say you can't trade at the moment because everything that's going on is so tricky and it's so difficult, and things bump and then push back, and I didn't see that happening. Things were a lot easier. And I'm like, yeah, I can remember when I didn't want to leave my screens back in the day, because Euro would do a 200-point rally 3 times a week, and it would just be like that. I haven't seen that for years. So there are conditions that were occurring back when I was trading that haven't occurred. I haven't seen that level of movement in quite the same way. But there'll be other markets that are. So I think the easiest way to look at it is you have to trade through it. You need to know that your strategy still has an edge. So it involves testing, and you can test what's been going on here. And I say to people, is that theme will change. We won't be in this market for the next 10 years. That will change and will shift to something else. And you've just got to be adaptable. You've got to have a baseline. You've got to have your data. You've got to know what's going on. And then the more that you're in it actively, the more you can start to see patterns. So one of the guys that I work with who trades the DAX, he's been trading the DAX for 3 or 4 years, and he's like, the DAX should just be the Nasdaq. He says he says it's the Nasdaq because the DAX is so now related to what goes on in the US. So he said even in the last 4 years, because the news is so prominent, he's now having to pay attention to things that previously he would have an eye on, but now he's like zoning in. So it's things like that, rather than thinking, oh, there's news coming out this afternoon, there's US red folder news, I'm trading the DAX, what does it matter? It's like, no, that is having almost the same impact there as it is on the S&P.
Yeah, I mean that's interesting. If you go far enough back, I remember working the bid and offer for a couple of hours trying to get a fill on the bond. So it's like now you get filled instantly for everything, and then the situations where the US leads or Germany's doing its own thing. There's always going to be correlations between the markets, but they don't always stick. I mean, it's especially on things in the currencies now. What are your kind of views on? I mean, what you focus on product wise? That's what I'm interested in. What would you look at right now? What have you got a basket or?
Yeah, so my swing trading is basket is I will look at major indices, gold, silver, oil, and major pairs, and a few what I call major minors. So some of the bigger, euro yen, pairs, CAD yen, euro Aussie, that kind of thing, euro pound. So I'll have a group. So for me, because I could be in that trade for 3 weeks, or I could be in that trade for 3 days, I'm less likely to pay too much attention to the news. So I'm going a bit more data orientated, quantitative approach on that. But I have 2 strategies that I adapt. So I will leg into those, and that will be because I'm getting a setup that I want on that market, but I've also got a fundamental take. Now, so what I'll do is I'll say, look, the data tells me that despite what the markets are doing right now, what they did last year, this year, if I keep banging that trade out over time, it's going to give me the result. But if I want to be in that trade and run it for 5, 6, 7R, I've got to factor in what's going on fundamentally. So what I will do is I'll split the trade up. So keeping it simple, I might go in at 1% on the standard setup that's I would call the data orientated or core setup, and then I'll go in at 0.5% because I think that market could run. So, it's exactly what we're seeing on dollar yen at the moment. Now I'm thinking, there's a few things that are being said by the Bank of Japan that might shift it. What happens with the interest rate? Oh, so now I'm starting to, there's talk that there might be a drop, and the news on the US interest rate is it's jumping around a little bit, but the core trade is over. I've just got 0.5% that I'm running on. So for me, I'm trying to gauge that, but that's the thing. That's the element of the trade that I'm like, well, where will that go? Can I read that with the fundamentals? But the core bit of the trade, I'm kind of ignoring. So I very rarely enter a trade because I can see something fundamentally. It has to set up for me based on my set of rules, and then I'll add into it if I think there's a fundamental side that I can play. And that's just the way that I like to do it. So
That's logical.
Yeah, I think that I've always been. I wouldn't say that I have ignored fundamentals, but I've always kept it sort of on the back burner. But then once I realized if I want to start running trades for longer, I can't sit in trades for sit in a partial trade for 3 months and just ignore what's going on, because I could end up 12-hour up and then it just rolls over because I ignored the fact that it was a guaranteed rollover as soon as the Fed changed their interest rate, changed their stance on interest rates. So that's the approach that I've got. So yeah, it's almost the trade has to set up as per the data, and then if I can marry up the fundamentals on that particular trade, then I'll probably run that. I'll run a partial element of that for longer.
Yeah, that's good. That's something I think that will definitely help the listeners to get their head around, because you explained it really well. Because I don't believe you can kind of completely discount the fundamentals. Especially if you're a short-term trader. If you're trading over years and decades, that's an investor. If you want to trade, you have to be aware of what's being said. And for me, it's not even that it's news. It's more what you're seeing now through the financial markets. It's like what you see in the mainstream media, what's left of it. It's a narrative. So it's leading you up to an event that may or may not go. Because again, there's someone like Trump or the big players have so much power that it's like, oh yeah, I know where you believe that was happening, but actually this is happening, and the exact opposite happens. So you have to be aware of not just the news, but the narrative where it's leading, and again, taking the money off the table at some point. You can't really, as a trader, let things run indefinitely, because again, I think that moves into the more investing, kind of mindset, and that is something else. Trading's not investing, and that's my view, isn't it?
Yeah, totally agree. And I think the other thing is it's very easy to, and with the amount of information that's out there, it's very easy to be either overwhelmed by the amount of information coming at you, or almost because of that overwhelm, you actually have too narrow a focus, and you're only choosing to listen to one thing that maybe fits what you want the trade to do. And
In your own head, yeah.
yeah, the longer you're in a trade for, the more chance it's got of rolling the other way. So, I think that's a really good point. Is that the narrative leads up to something that may or may not happen is a very, very good way of looking at it, because they lead you to think this certain thing is going to happen.
Well, it's also a trust thing. Is Warren Buffett going to tell you what he's going to do before he does it? No, the billionaires, they're billionaires for a reason. There's no free handouts, I'm afraid. Is there anything else you want to talk about at this point? I think we've covered the main points. Do you want to go over the book?
Madness of Money was something I did. It's a project I did with a friend a long time ago. It's a guy called Neil Chapman. He's rise to fame. I think he was at Fidelity. He was one of the traders there, and at one point he placed the biggest trade at the firm in the 80s. So he's back old school. I know, mobile phone, like the real first of the first. Yeah, the big brick. Yeah, he's a really lovely guy, Neil. So yeah, I got involved with that to just give the trader's perspective. But in terms of a book, I am pondering whether or not that's something I'm going to do. Obviously, these days it's a bit easier to get that process started. But certainly for me, I would want, I think what's missing in the market is a sort of in the trenches book for retail traders. So not another technical book, not even really a mindset book, but a more an ABC. If you're struggling with this, then maybe you need to go down this route. If you're struggling with this, or case study scenarios of where people could go. So that's something that I'm thinking of doing in the future. So yeah, I think it's interesting times, as you've said. It's interesting times in the retail space. Obviously, I get a lot coming at me from the prop firm perspective, because I get the email, broke, and you get me funded by the end of the week, and people are seeing that as the way out. I don't think prop firms. I don't think it's a complete scam, but I think it's the 80-20 rule. There's probably only 20% of firms out there that are actually legit, even maybe less than that. Maybe it's a 90-10. But I think something will happen with this industry. I think you'll have to go a little bit bad, but I'm hopeful that at a certain point, traders will get access to funding in a more realistic way that is not about a Ponzi scheme. And I'm maybe I'm a bit naive, but I'm hoping maybe brokers at some point will see an opportunity here, because it's brought in all these people. But I think the interesting thing as a coach is just seeing the psychology of a trader that is trying to pass a challenge versus a trader who is, trying to build their own account. And it's interesting. I've worked with a few guys that have been able to get funded and get paid out, but it's, I think it's a very small amount. And I think that people are putting their hopes and dreams. Back when I got involved, it was sitting on the beach and financial freedom. This is just the new scam, the new message, the new narrative. And if there's anyone listening out there in that, and they think that's the way out, well, if you're going to do it, fine. But you need to, I say to all the guys I work with, you've got to trade your own funds, even if just as a psychological exercise to see that you behave so much differently when you're trading your own money. So I think I'm hopeful that something will happen in that industry that shakes it up, so that good, skilled, responsible traders will get the opportunity to grow. But yeah, we'll have to wait and see on that one.
Absolutely. I mean, going back to the kind of the mill, kind of formula you have, do you think they would meet the prop criteria, or is that not something?
I mean, again, depends on the firm, depends on I've got day trading strategies, I've got swing trading strategies. My overriding scenario that I say to all my guys is you'll probably have to adapt my strategies either through risk or through trade frequency, because prop firms are designed to kick you out. They're a casino. They only want a certain number of people through the door. They can only afford to it. And because the market is essentially, in terms of number of people coming in, yes, there's more and more, but it's it's hit a bit of a ceiling, but you've got all of these firms that are fighting. So you've got all these things where people aren't getting paid out and all this other stuff. So my view is you won't just be able to simply take my formula, because my formula has not been designed around a profit. My formula has been designed around being profitable. So don't expect to take it. You're going to have to probably adapt it and change it. And I always say to these people is you have to see getting funded and keeping funding is two very different things. You can get funded by just rolling the dice and just saying, look, I'm gonna, it doesn't mean anything getting funded, but all right, we know that it's not real money, but once you have got 100,000, what do you think everybody else is trying to do? They're trying to get their first payout. Well, taking aside whether you will get the payout and whether the firm will do that, you should be thinking at that point like a fund manager and going, I've got 100,000 assets under management, although you haven't. Think that way and take a longer term approach, because all of the majority of people in that firm, or all of them, are just trying to get their first payout. So you even if you didn't get paid out because the firm wasn't legit, was that a good training exercise? Probably. I always say to people, you should be focused on your own money. And if you get paid out and you're fortunate enough to do that and the firm is legit, get that money in your own trading account and build your own capital, because then you're not beholden to anyone.
Well, it goes back to your original point that you wanted control. So you trade for the money, but also control. And I think the guys have been in it long enough know that's the real kind of payout, when you don't answer to anybody. I'm not saying it's easy, not saying it's for everybody. I'm not saying, it's, it's having it all, because it's not. There's a lot of downside to being a trader, your own boss, and everything being on your shoulders. And it suits certain people, and it doesn't.
Yeah, great.
So, Ali, what's the best way for people to get hold of you then? Obviously you have an online presence.
Yeah, you can search my name. You'll go to tradersupportclub.com. You can see what we do. You can see some of the people I've worked with and just find out a little bit more. I'm just getting a bit more. I'm getting a bit more active on YouTube, so you're going to see a few more coaching insights from me and just videos and training videos there. So you can just search Ali Crooks. Search Ali Crooks Trader Support Club, and something will pop up, either social media or the website. And yeah, get along. We've got you can sign up to my weekly newsletter. We send out regular videos and regular updates, and we do a few live events in the UK as well. So yeah, just have a search and come find me.
Excellent. Well, I mean that's been great. Again, there's certain guests where I could say we could carry on this conversation forever, but we have to draw a line at some point. But it's been great. Thanks for the insights, and yeah, definitely some things for the guys out there to think about. I do especially like this idea of your whole mill process. That's been good. So yeah. So from me, Steve Ruffley.